Hello Dairy Today viewers. From the advisory team at Stewart Peterson, here's your dairy market week in review. Let's start by taking a look at our dairy products this week for a brief overview. Starting with our cheese market, the blocks and barrels at the CME down for the fourth consecutive week this week. Losses continue to mount up for those prices, now down to $165.5 on the blocks, $157.25 on the barrels. Our butter market put together a better week relative to cheese and was actually up a penny, now climbing back to $164. Our powder products continue to be a little bit mixed. This week could reverse the trend of the last couple of weeks, with whey prices being off just a bit, while our non-fat dry milk futures rose just slightly. Class 3 prices held their own this week, but finally had to give way a bit with cheese lower on Friday. Big losses in the front quarter months, with January down a notable 44 cents. However, those losses did moderate as you get out in the second, third, and fourth quarters of 2012. Class 4 values this week relatively unchanged and a bit mixed as we look at gains anywhere from down 10 cents to a positive 10 cents throughout 2012. Diving now into some of our price action from this week, we start with Tuesday's Global Dairy Trading event and a very positive auction altogether, with each individual product seeing gains from our last round. Overall, the average increase was 2.6%, with our whole milk powder and skim milk powder up 2 and 2.6% respectively. Positive gains on this auction were definitely supportive to both our Class 3 and Class 4 prices earlier in this week. However, towards the second half of the week, we did see some losses on our milk futures, and a lot of that pressure came from our block and barrel markets on the CME. As mentioned, this was our fourth consecutive week of setbacks for our cheese block barrel average, and we now have broken what was pretty major support at the September and October lows at about that 167 average price. So as we go at 161 this week, it is important to note that there was very aggressive buying interest toward the tail end of this week, both Thursday and especially here on Friday. The total of 39 barrels traded this week. It's the highest volume week for the barrel market since June of 2010. So we're seeing a bit of a two-sided argument develop. There's apparent value buying going on at this lower level. However, from that technical and chart perspective, we're continuing to break into lower levels. In addition, this week we're watching some other international developments. As mentioned, the latest Global Dairy Trading event was very positive. As we look at other data reported to us from the USDA, however, we continue to see our cheese prices continue to set back. And what we're looking to see if our cheese price can maintain that normal relationship and hopefully promote the export market by setting back to our typical discount towards the Oceania price. We're continuing to watch the same relationship as we look at our whey prices, and as we study this, we've seen our blue CME dry whey prices make an incredible run higher over the past 10 to 12 months. The international prices, particularly European, have been sideways to lower in that same time frame, and we're challenging these markets now that Oceania has really passed its peak production season to really make that comeback and firm up as we're moving ahead. As we move into next week's trade, we're going to be watching our first quarter months with special interest to see if we can really turn around the momentum that developed here at the end of the week and get going in that positive action again. Looking at our weekly Class 3 January price, we saw a good setback towards the end of this week, but still holding on to the recent low from 2 weeks ago and still have an opportunity to correct that if we can see that value buying and firmness in the cheese market develop. If that's not the case, we are at risk to see a setback towards the low end of this range between $16 and $16.25, and that's the risk that we want to be prepared for in the coming weeks as well. As we look a little broader scope, we're still keeping in mind some of the big picture developments taking place both in the U.S. And abroad, particularly looking at the European debt situation. The U.S. dollar put on a very impressive run in November, and it had a quieter start to December with some of the positive developments that are coming out of the European debt situation. However, we want to be very aware that shocks and different news items can drastically change that, pushing prices up past this double top resistance or setting back the US dollar and providing a bit of our support for our commodities. So we want to continue to watch the international scene, as that will continue to overshadow not only our dairy market but commodities in general. So as we look ahead to next week, we're curious to see how this battle that seems to be developing within our cheese market between some of the bullish value buyers that we're seeing come out, as well as some of the technical bears that are still out there. Next, we want to be talking and looking at our powder markets and see if those can continue to show the strength in the whey market and really show a reversal in the non-fat dry milk prices and really lend some support to both Class 3 and Class 4 milk. And lastly, we will be watching the international scene and how the European debt crisis continues to develop as it overshadows the U.S. economy and our commodity prices. From your advisory team at Stewart Peterson, I'm Stephen Shella for Dairy Today and AgWeb.com.